We're repricing risk in a way. It's equities, it's AI, it's Bitcoin, it's really across the piece. So I don't think this is specifically about crypto or digital assets. I think for us, what's really interesting is we're a big investor in Hype, the native token of Hyperliquid. Hyperliquid, as you know, is developed right here in Singapore by Jeff Yan and his team, and it's a decentralized, non-custodian exchange. And its native token Hype over the last 7 days is up a bit, where Bitcoin and most of the other tokens are down. But I would say that's rare. It's unusual. Really, across the piece, we've seen risk assets be repriced. In my sense, this is a healthy correction, not something that's turning into a bear market. So I think for many reasons, I was just at the GIC Insights over the last day. Anybody associated with GIC, appreciates who they bring together once a year to talk about these trends. And, one of the things we were talking about there was the big numbers in AI. I mean, the billions here, trillions there, billions here, data centers. And I think most people have a hard time really processing it. And that doesn't really work against the fact that we can be really, really positive on AI over the next 5 to 10 years and the impact it's going to have.
But the big numbers are scary, especially at a time when they continue to invest in sort of each other,
all
right?
Over the place. Yeah.
And these concerns about a circular deal, about whether this is just a bubble. So you don't buy into that. Will there be demand down the line?
What I feel comfortable in is taking a 2, 3, 5-year view of the impact of AI. I think it will be a real positive in dampening inflation. I think it's going to be incredibly important in terms of productivity in the global economy. And I think some people are confused right now over the valuations. And many people say this. They look back, to the internet bubble in 2000, right? It had a real bubble because there was some fringe equities that probably weren't legitimate as much as kind of the core. But nothing stopped the development of the internet over the next 10, 15, 20 years. And I think the consensus over the last day has been where really we, the group, are very, very positive on what AI can bring in terms of productivity, dampening inflation, global growth, really comfortable. So I think this is a correction in risk assets across the piece. And I think, AI, partly because there's so many big numbers out there, that people really don't understand yet, in particularly around data centers.
Yeah, I think it's hard to decipher. And to your point about the internet economy, it was also about sifting out the froth at that stage early on in the game. When it comes to digital assets, you look at tokenization, as you highlighted earlier, as a key driver. How are you viewing, say, stable coins, and how that might be shaping the financial system?
Well, that's the other big investment we made at Atlas Merchant Capital. We're an early investor in Circle in 2021. We've worked with Jeremy Allaire and his team very closely over the years. They have a tremendous relationship here in Singapore with the Monetary Authority of Singapore and the developments that they've had. And I think we've learned so much about the impact of blockchain in terms of we believe will be a real source of the underlying foundation of financial services over the next 2, 3, 5 years. Stable coins are really here to stay. And I think the acceptance of Circle as the most regulated, the most conservative, really has reserves behind it that are managed by BlackRock, as you know. So I think the best of the best in stablecoins is Circle, highly regulated. They want to be highly regulated. They want to be an OCC bank in the U.S. So I think the developments there are very strong. And I think what we've seen this year is a sea change in the U.S. in terms of tailwinds. With this administration, with Scott Bessent in the Treasury, with Paul Atkins in the SEC, with Jay Clayton, this team is so highly respected and so supportive of regulation that covers both digital assets and financial services, not two separate regulatory.
What else in your mind in terms of deliverables left to go on these regulatory guardrails for the environment?
Well, I think the most important thing from my point of view is we look at stablecoins is the increase in institutional use. A move from crypto traders using stablecoins and using digital currencies to treasurers, to Visa and MasterCard, to the big banks like JP Morgan and B of A developing it. We're certainly seeing in the Middle East with some of the best banks in Abu Dhabi and Dubai already developing use cases for blockchain and stablecoin, particularly dollar stablecoins, particularly USDC.
So I know that you talked about perhaps the U.S. regional banks and the consolidation in that sector, right? What scares me right now is all of the froth, not only in the crypto space, but of course we talked about tech and the buildup around artificial intelligence. Where do you go to hide when you could potentially see, as Jamie Dimon said, cockroaches, one means more, and you've seen even around banks in the U.S. where you had isolated incidents with Tricolor or First Brand. So. Is there a hedging mechanism at the moment?
Well, I think there's two different questions there. In terms of the comment on cockroaches, I mean, I think it was a statement of credit.
Credit.
And if we're being very, very honest with ourselves, we had 12 years of zero interest rates after the great financial crisis in 2008. Then we had a steep increase from 0 to 5.5%. I would have thought back then we would have seen cracks in credit because it was such a long period of credit was really very, very available. And I think today it would be unsurprising to me, given how tight credit spreads are, that we see some correction in credit spreads.
To be fair, a lot of people say that credit spreads are tight right now because they're not really thinking about the fiscal risk that's already baked in, because you can't even really count on sovereigns at the moment with their building debt load that they're actually safe.
Well, you have, I think, Sherry, what you just brought up is the darkest cloud overhanging the markets, which are the debt levels. We're talking about the credit markets, but what you're referring to now is sovereign credit, and in particular from the U.S. and the much higher debt levels. And that is the dark cloud hanging over the market, for sure.
What about PE? How are you approaching fundraising going into next year?
With all this volatility, it makes what we do in private equity even more sustainable. And I think when you look at, the correction in equities, for example, in the U.S., it's primarily around those 7 or 8 or 9 equities in tech that have really been leading the rally. You move from that to the smaller companies in the index, and then you move from that to the private companies. We're seeing very, very good opportunities in private equity. We focus on financial services. We do a lot in the U.S. One of the things that we see as a terrific opportunity is consolidation in regional and community banks. Their ability to pull costs out, to create cost synergies almost immediately with consolidation. I mean, particularly here, when I mention to people that there's 4,500 banks in the U.S., they usually look at me like, what?
Yeah.
And you see
the United States has 4,500 banks, and they're really good. And as Scott Bessent, the Secretary of the Treasury, has pointed out many times, about half of the lending to small businesses in the U.S. come from regional and community banks, not from kind of the big four. So there are a lot of great opportunities out there in private markets.
Well, Dimon, really good to have you with us. Thanks for finishing the conversation on an upbeat note here at the New Economy Forum. 2025 is the founding partner and CEO at Atlas Merchant Capital. We'll be back with more. This is Bloomberg.